Investment company Eppley wants to raise $1.2 billion to refinance its debt, so they're selling 60 million new preference shares in the company. We're going through the prospectus so you can decide if this is a good investment for you and your money. I'm Khalila Reynolds, and it's time for another episode of Money Mondays JA.
Money Mondays JA is brought to you by Proven Wealth. Visit provenwealth.com to speak to an investment advisor today and follow We Are Proven on social media. And Bulwark Insurance Agency. Looking for affordable insurance? Visit bulwarkja.com. Follow them on social media at official bulwarkja.
Before we get started, don't forget to like this video, subscribe to this channel, and turn on those post notifications. Also subscribe to our newsletter by clicking the link up here or in the description box below. You'll get access to a transcript of this episode so that you can read at your leisure and really digest the information. So, investment company Eppley Limited wants to raise 1.2 billion Jamaican dollars, or nearly 8 million US dollars. And to do so, they've created 60 million new preference shares and are selling them to the public. There are three categories of new shares: Class A, B, and C. The difference between the classes of shares has to do with the dividend payout rate, but I'll talk about that in a minute. All the new shares are priced at 20 Jamaican dollars, so classes A, B, and C are all the same price. There's a minimum purchase of 200 shares, so for 4,000 Jamaican dollars or 26 US dollars, you could buy some of these shares. However, you have to buy in increments of 100, so you wouldn't be able to buy 250 shares, for example. You'd have to do 300 or 400 and so on. The offer opened on Monday, July 12, and is scheduled to close on July 26 at 4 p.m. Now, a couple of things to note before we continue. First of all, what are preference shares? So preference shares, sometimes referred to as preferred stock, are shares in a company with dividends that are paid out to shareholders before common stock dividends are issued. Simply put, shareholders with preference shares will receive preference when it comes time to receive dividends. Now, preference shares are different from ordinary shares in that they have a fixed dividend. With ordinary shares, the dividend payment can fluctuate depending on how much money the company made or how much of the profits they decide to share out. One of the benefits of preference shares, you always know what you're going to get and when. One of the downsides, though, is that shareholders typically do not hold any voting rights, whereas ordinary shareholders do. Now, it's also important to note that Eppley's preference share offer is not considered an additional public offer, or APO, despite them offering new shares to the public. And that's because companies who choose to raise money through APOs do so by offering new ordinary shares, which, as we mentioned, are different from preference shares. With me so far? All right, so about Eppley. The company was founded in 1973 as Orrit and Musson Investment Company Limited, a wholly owned subsidiary of General Accident Insurance Company Jamaica Limited. In the prospectus, Eppley describes itself as an investment company that operates on the principle that addressing inefficiencies in Caribbean financial markets produces attractive returns with low risk. We all want low risk, right? In 2011, the company was sold to Musson Investments. Then in 2013, it was rebranded as Eppley Limited. That same year, Eppley was listed on the junior market of the Jamaica Stock Exchange. In 2016, Musson sold basically all of its investment in Eppley, and the company ceased to be a subsidiary and affiliate of Musson. Then in 2018, Eppley graduated to the main market of the JSE. Today, Eppley invests in private assets including credit, mezzanine, real estate, and infrastructure. Eppley also earns fees by managing funds that invest in these asset classes on behalf of investors. According to Eppley, its earnings are primarily composed of income from its proprietary investment portfolio and fees from its asset management business, so main streams of income. In 2020, the company recorded its highest profits ever as its asset management business grew and they diversified their investments. And 2020 was the second year in a row of record profits for Eppley. Net profits rose to 225 million Jamaican dollars, or roughly 1.4 million US. That's a 38% increase over the previous year. Now, diving back into the prospectus, like I mentioned earlier, Eppley is offering shares across 3 different categories, each with a fixed dividend rate. The Class A preference shares offer 5% a year until 2023. The Class B shares offer 7.25% a year until 2026, and the Class C shares offer 7.75% a year until 2028. The company has also included an option to sell more Class B and C shares if they get good take-up. That's what they call upsizing the offer. Dividends are to be paid quarterly on the last business day of each quarter. If you choose to buy these shares, you'll get your first dividend check at the end of the next quarter after the JSE approves the listing, assuming, of course, that they meet their target and the shares are indeed listed. So Eppley said it intends to use the funds mostly to refinance debt and to pay the expenses of the invitation, which the directors believe will not pass $35 million. So just to explain why they want to refinance their debt, there are much lower interest rates available right now than a few years ago. If you borrowed money for a car or a house, say 5 years ago, you likely are paying a higher interest rate than you would if you took out a loan today. You can actually approach your bank and seek to refinance that debt or move your loan to another bank that's offering a better interest rate. So that's basically what Eppley is doing. They're seeking to take advantage of the lower interest rates that are available right now. Now, as we know, every investment comes with risks, and this is no different. So I strongly encourage that you go through the prospectus and read through all the risks associated with investing in Eppley's preference share offer. However, I'll just quickly talk about 3 of them right now. The first being the availability of loan funding. Eppley's operations depend on its ability to secure funds to originate loans. The company funds its investments with its own equity capital, preference shares, borrowings, and retained earnings. Therefore, the company relies on its ability to raise more money on terms that are attractive enough and that allow for profitable investment. So if the company can't raise the funds, then it won't be able to operate. Womp womp. Well, the next risk is one that we've become really familiar with over the years, and especially the past 15 months. Natural disasters and other catastrophic events such as hurricanes, earthquakes, tornadoes, fires, explosions, or pandemics can negatively impact financial markets and business confidence. And finally, there's always the volatility in the price of shares and flat trading to consider. It's possible that you may experience instability in their market price or flat trading, which just means the shares are being traded very infrequently or at insufficient volumes. These factors could end up being more than just a short-term problem. Share prices often vary depending on the company's financial performance, investor confidence, and other factors over which the company may have no control. Now, for comparison, speaking of the share price, Eppley has some other preference shares on the market right now. It has 7.5% preference shares due 2024. Those currently trade for around $11. They received a significant bump around April when they were in the $6 range. They also have 8.25% preference shares that trade for around $7, and you can see the fluctuation in the price there. And they have 8.75% preference shares due 2023, which trade for around $7.50. Again, a lot of volatility there in the past year. But note, all of those green circles, those are all the dividend payments. You see, they're quite consistent. Well, the company's ordinary shares currently sell for about $40, and you can see that steady climb in the past year. This time last year, Eppley ordinary shares cost about $17, so that's a pretty great return in 12 months. Okay, so now you might be thinking, well, I've heard what you have to say and I want to participate in the offer. How can I do that? You can apply online through Sagicor's e-Invest platform or by visiting Sagicor Investments Jamaica. But first, make sure that you consult your licensed financial advisor to find out if this is a good fit for you. I am not a licensed financial advisor, so nothing I've said here is to be taken as advice, but you can consult a licensed advisor at Proven Wealth by visiting provenwealth.com or reaching out to them on social media at We Are Proven. That's it for this episode of Money Mondays JA. On Taking Stock, we'll be delving more into the Eppley share offer. On this episode of Taking Stock, Eppley is selling 60 million new preference shares at $20 each. Could this be the right investment for you? We'll find out more from Managing Director Nicholas Scott.
We fund our business with our own money in ordinary shares and preference shares, and we do that in the ordinary course. And in this particular raise, we're raising $1.2 billion with the ability to upsize.
And later, the analysts weigh in on the latest market developments. Barita wants to do another APO in less than a year.
It's not as abnormal for companies to have various rounds of raising capital. For example, Proven has had various rounds of raising capital. So it's all a matter of seeing what the capital is going to be used to do.
And the Jamaican dollar has passed 155 to 1 US. Should you be worried?
It's definitely cause for concern. It's definitely, I think yesterday was 155, 36 or 37. It's hard to approach the situation.
Now don't forget to like this video, subscribe to my YouTube channel, and sign up for my newsletter at KalilaReynolds.com, where you can read a full transcript of this episode. You can click the link in the description box below. Also follow me on Twitter and Instagram at Kalila Ray, and on Facebook at Kalila Reynolds Media. And if you're into podcasts, find us on your favorite podcasting platform, including Apple Podcasts and Spotify. I'm Kalila Reynolds. Let's get this money.
Money Mondays JA was brought to you by Proven Wealth. Visit provenwealth.com to speak to an investment advisor today, and follow We Are Proven on social media. And Bulwark Insurance Agency. Looking for affordable insurance? Visit bulwarkja.com. Follow them on social media at official bulwarkja.